some of the highways. But the core sector data for the month of February has come in at a 15-month low, and this is the lowest level since November of 2015. Latha joins us now with the details. So Latha, it's not looking good for the macros.
Yeah, actually the core sector is a rather bleak number, just 1%, and look at the comparison. Last month we did 3.4, previous month 5.6, previously 4.9, and all those were demonetization months. One doesn't expect core sector items like electricity and coal and refineries to get impacted by demonetization. It's only a cash problem, but nevertheless it did well in those periods. Therefore, this surprisingly bad performance in February is inexplicable. Of course, February ago was a very strong performance, so there is a strong base, but usually winter months see very good performance from the core sector, so this is a disappointment. The biggest contribution to the disappointment comes from cement. Cement has been contracting ever since demonetization was announced, but this is really bad. This time it is a 15.8 or a 16% contraction compared to year-ago levels. January also was a contraction, that was 13.3. The previous month, December, was a contraction of 8.7. So cement has had a really pathetic run in the last 4 months or so, and February really takes the cake. The other bad performance come from electricity, a growth of just 1.5%. The previous 2 months were not bad. You know, we had done 10% in November, 6% in December, and about 5% in January. So this is a rather poor showing on a year-on-year sense. After that, the bad performance comes from crude oil. Again, minus 3.5%. It's had a bad run, but minus 3.5% in February is particularly bad. Refinery products have also not done too well. Again, a contraction of minus 2.3%. Fertilizer is about the worst, actually, minus 5.3%. Again, it's been contracting for the last 2 or 3 years. All of this wants to make you doubt if the Rabi product output will be very good. The surprisingly good performance comes from steel. That's the good news in the pack, which counters a little bit of all this negativity. A growth of 8.7%. Of course, even January and December were very good with 11 and 14% growth. So clearly the global positivity in steel is also impacting the Indian steel companies. Coal has been another decent performer, turning in about 7.1%. But all told, this is quite a bad performance, giving an impression that maybe we are going to see bad IIP numbers and some impact on the GDP as well.